Hi there, Frank here for premium members for the trading day of February 26, 2025, a Wednesday. Markets seem to be changing, so I thought I would make a video here which I hope will be useful for both big groups of REMAC traders, the totally algorithmic crowd, which is a quite viable way to trade, and we have world-class tools to help you with your algorithmic trading projects. So let's start with the completely algorithmic trading approach. Trading legends like Jim Simons, for example, who passed away recently, was one of the most successful algorithmic traders over the years, over the past 3-4 decades. And there are other traders successful who are not completely algorithmic, but also include their discretionary analysis in their work. So back to algorithmic trading. So imagine you come in the morning, you switch on the system, and you don't want to introduce your personal opinions into your trading process. You just want to be quantitative, just relying on the numbers and on the method. And you want the computer to make the decisions for you 100%. You would still supervise the system. Of course, you want to make sure the internet is connected and your data feed is good and Ninja is working fine and the computer, the Windows environment is working fine. So you still want to be there, but you don't need to touch the mouse. Let's see. I'm going to start the strategy analyzer and I'm going to ask NinjaTrader a question. What would have happened if I had run ProSTRBT, which is our algorithmic powerhouse, for a long time, because I want to have thousands and thousands of trades in my database. So let's see, and I'm going to just select the index futures, the 4 indexes, you see, futures contracts in this test. 15-minute, I'm not going to fiddle with my settings. Probably we could run some optimization, but I'm not going to bother with that. And the question is, if just a rough test with the basic settings gives us good results, then imagine what a little finesse or a little fine-tuning could bring out from the system. Again, I'm just staying with the basic settings that I usually do and that which you have also seen in many other tests. Okay, so what are these settings? 15-minute chart. I'm going to pick a 5-year, just about a 5-year look-back period, because I want to have a lot of trades in the database, in the results. And then I'm going to use market order. You know that when we use market order, there's an advantage of using market order in the test, and there's a little disadvantage. Market order means that each trigger will be filled, but there will be a little slippage, naturally, but we're okay with that. Now, what about the contracts? There are 2 order sets. In the first order set, I'm going to put 1 contract, and here's the settings, usual settings. The target is 1.5 ATRs, and the stop is 3 ATRs. Why these numbers? 1.5, well, I start with the 3. The 3 ATR stop is just about the other side of the Keltner channel. That's what we normally or usually use, and you have seen this in many other videos, so I'm not changing that. 1.5 is a target for the first contract because I want to take profits on the first contract relatively quickly. If the trade moves, I want to remove my first contract with a profit relatively quickly, and I'm fine with that. I'm not going to fine-tune anything with initial stops. These are more fancy, more advanced settings. You can explore them later. Second order set, 1 contract, no profit target because this is an open target. The initial stop is 3 ATRs, same as in the first one. And what I'm going to do here, no adjusting, no fancy stuff again. What I'm going to do here, watch this. If and when the first target gets hit on the first contract, I will start trailing the second contract. And I will start with a trailing stop 2 ATRs behind my position. So I'm tightening my stop. And then, if and when the second contract is moving in my direction, I'm going to continue with a trailing stop. I'm going to continue to tighten the position until I get stopped out. So the second contract, in effect, is a runner. So to sum it up, 3 ATR stop for both, 1.5 target for the first one. If and when the first one gets hit, then the second one gets tightened, and then will continue to get tightened until we're stopped out. I'm not going to define trading hours. You could, if you just want to trade the electronic hours or the daily session or the day session, then you can define these, but I'm just going to run it 24/7 to keep it quick. And all the other settings, you see, everything's the same. I'm not changing anything. Default settings, factory settings, and these are just good enough. And hopefully, this will give us an indication, a good start, and the foundation of our confidence to run, excuse me, and trade algorithmically. So I'm going to run the test. All right, so here are the results. First of all, altogether, we have 17,000 trades for instruments, a 5-year period. And I just usually click on the profit factor. And what I want to know as a first little quick look here, if it's over 1.0. Over 1.0 means we have a positive edge. And look, all of them, all four, are the NQ. Usually, as usually in many of our tests, just performs beautifully. But all the others, look at this, percent profitable, much more than 50% of our trades are profitable with this method. Consequently, and as a result of a trailing stop and the runner, our win-loss ratio is also better than 1, which is shown in the profit factor. All right, so I hope this gives you the confidence to start looking at the system and working with the system and building your trading business if you're an algorithmic trader or if you're an aspiring algorithmic trader. Again, the advantages of going algorithmic are multifold and very strong. I encourage everybody to look at algorithmic trading intensively and decide if this would be for you. Now, let me also just quickly click on some of the equity curves. Here we go. So drawdowns are a natural part of the process. So you can see these pullbacks also in the equity curves. But by and large, this is a equity curve that I would be rather happy with, and I'm sure you would agree. This is the NQ. If we look at, let's look at all 3 or 4 of them actually, RTY. You see, this is why we need a carefully calculated starting account, so we do not blow the account when we start trading. There's no guarantee that we're going to have just winning trades when we start. We can run into a series of losing trades before we take off. We could be proud of this equity curve. And look at the YM is next. And last but not least, the ES. A little bit of drawdown here, underwater area around 2021, coming out of the COVID crisis, I think. But by and large, look at this. If you are looking at the combined results, 112 is what we're really interested in. And the max drawdown was 51,000. I think this as just a first 2-minute rough test is a strong indication about the strength of this methodology. So if you're interested, get the tools, ProSTRBT, available in our shop, and get to work. Algorithmic trading can be a very fruitful endeavor. So this is just a little summary here, and I hope this helps. And we're approaching the end of February, actually. We're going to ease back to our usual trading routine. Again, I hope this helps, and we'll be back soon. Until then, mindful trading.